Hello, it's Graham Bibby on the 5th of September 2015, coming to you from the paradise island of Phuket. Today is going to be a bit of a fast action walk through markets after quite a volatile week, which we avoided due to our moving to cash right on this part of the chart. This is the Nasdaq here. This is the daily chart. And when we broke below support here, on a Friday, we signaled a sell, which is more than 2 weeks ago now, and avoided this huge significant drop. Okay, we had a bounce back, but looks like we're turning over. These highs are lower. We need to see if this low is violated. But anyway, I want to walk you through a few things just to show you what's going on. This is the exchange traded fund, the ETF that invests in gold miners. It is leveraged, but this fund, this is the severity of the gold and silver falls. This fund was over on the right here. See 2,000? This fund was over 2,000. It was actually 2,100 in 2011, and this shows us here in this box here, bar close, the closing price as at Friday. $2.85 from 2000. But it does look like gold and silver trying to bottom here, first of all, maybe trying to bottom here. So this is one of the things in my special situations, because even if the stock went from $2.85 to $28, it would still be down a huge amount from 2000. And even if it was 285, it'd still be down over 85% from its all-time high. But if you'd got in somewhere near the lows, you can make serious money. You can make 5 times your money, 10 times your money, even 100 times your money. So I'm watching this closely, because a lot of gold mines, or a number of gold mines and silver mines, the stock price is currently below the cash in the bank. Anyway, let's move on. I just gave a nice talk for Saxo Capital Markets in Sydney, and this is the Australian market. Again, I told my friends there they shouldn't be invested in the stock market. My clients went 100% cash. If you had been in the Australian Ordinaries Index in April, you would have sold on this dip. Even though we had a rally, you would have sold on this dip. And if you hadn't sold on this dip, you definitely would have sold on this dip. So you would have got out of the market somewhere around 5,750, and it's 5,060 today. That's a significant saving. Okay, let's go on to the next thing. This is Facebook. Facebook signaled a sell here in this downtrend, and then we had a huge down day and a down day where it went from 90 all the way down to 72, which is huge, 18% movement. But then the underlying strength in Facebook, and you know I love Facebook, but I got to follow my trends, and then we had a significant bounce. And right now it's 88.26, which is not too bad, and it's ended up last night. So it's one of the stocks, when normal service is resumed, I'm sure we will be buying, and I'm sure it will be outperforming. This is the Shanghai stock market. The stock market gave a sell itself up here where this line is. This was before the big crashes were coming. This was the first decline. If you didn't sell out many times to sell out here, then we had a short-term rally, and then it's all been falling apart. The market's down some 40% from the top, and I can't see any way that the Shanghai stock market is going to be doing this type of thing in the near future or even the months ahead. So if you're in it, for me, you should get out of it. You should look to redeploy your money where it's going to make the most upside, and it ain't going to be in Shanghai. Okay, let's just get over to the dollar. The dollar is now in a trading range. This is the US dollar index. As you know, last June, I signaled a buy signal when it broke out of the trading range, and I mentioned it was in from 79 to 81, the dollar index, and it went from 81 to 100. That is huge. That's 19% move in a currency. And since then, we're in this consolidation phase. We need to break out up through here or down through here to signal the next move. Okay, let's get on to the index, because the US markets are the markets everyone's watching. This is the Russell. 2,000 small, medium-sized companies had been breaking down a bit with lower highs for some time. And then when I signaled the sell out of all markets and all stocks, we just went to new lows. And we've just been declining and we've turned over. So the market ain't looking good. Apple, a bellwether of the US stock market, one of the biggest and most profitable companies, you can see clearly here, it was in a downtrend. We actually sold at the end of June, which is way up here. We signaled a sell at 125, it's 109 now, and at one stage it got down to 92. That was a 27% saving by using stop losses. Okay, it's bounced. So right now it's a 14% saving, because the key to all of this is reduction and protection from the downside. So that's why people join or should be joining the Insiders Club, not just because of my longer term outperformance, but I will protect you from the downside. Here's the NASDAQ. And again, as we turn down on this day, I signaled a sellout of all stocks, and then bam, bam, it went from 4,900 to 4,300, which is huge in 2 days. Okay, we had a bounce. Now, if I zoom out very quickly, that could have been a low there. We started to turn up, but the last 2 days we've turned over. Now, if we violate this low, then we're going to possibly be attacking this low again. So this is not a time for bravery. So we're sitting on the sidelines, fully protected, just watching the market action. I've got some great stocks to buy when it all fades away. S&P 500, this was the day that signaled sell, get out of everything. And then we had boom, boom, 2 huge days. And then we bounced up and we're getting back almost again to the low. That ain't looking good. And if we go below this level, we could attack this level. So the trend currently is not up. It's more likely down than up. If we go somewhere else like Hong Kong, the ETF, Exchange Traded Fund, which was 24 something, is now 18 something. I mean, that's a 20 something% move in a few months. You couldn't have been in that if you're one of my clients. This is the Dow Jones Industrial. Again, same movement as the S&P, ain't looking good. Go across to Germany. I want to show Europe because Mr. Buffett said you should move there a few months ago. And the German ETF here was 30.5. It's 25.5 now. So it's down 15% since that move was signaled, because diversification doesn't work the way it used to work. Markets are all interlinked. There's just a time to be invested and a time not to be invested. Now, here's a safe market of Singapore, inverted commas. This ETF was 13.6 at the end of April. It's 10.2 now. So, again, it's down about 25%. That is huge for safe Singapore. A lot of people that I saw in Australia were holding bellwethers like BHP. Wow. What a traumatic time that's had. Just since May, it's gone from 52 to 33, which is a 35% move. And, when we see where it used to be up here at 80, 33, that is huge. That's over a 60% decline in your portfolio. The thing is, your trends, your friend, get out. And emerging markets overall have been in significant downtrends. This one's slightly geared ETF, which was 35. It's 11 from 35, 60-something% down. Now, don't get dismayed. These down charts are great because that's profits for the future, because everything goes in cycles. And when we get an uptrend like this one, this is moving here from 21 to 36. 50% movement in 1, 2, 3, 4, 5, 6 months, 50% movement. So at some stage, this will break out and then we'll get an uptrend. It's just as like on my special situations where I'm looking at seriously, extremely undervalued oil, gas, resources, gold, silver, many selling, the stocks selling below the cash in the bank. when this turns, there's fortunes to be made. So it's Graham Bibby here with a quick market roundup. A bit unusual, the start of it today, but we've gone to 10 minutes. So done my time. Have a great weekend. Next week, I'm sure the markets are going to tell me where the trends are going from here. Are we going down further, in which case we're sitting back because it's profits for the future, or whether we're stabilizing and a new uptrend going to start and we'll get back into it, because I've got the best undervalued watch list I've ever had. Undervalued superior earnings, which means that when these babies start to rise, my returns will outperform my norm. That means we're going to make exceptional returns. So if you're not in the Insiders Club, send me an email, ceo@richmondth.com, or send me any questions you have about your portfolio. I'm here to help. So Graham Bibby on the 5th of September 2015 saying, enjoy the rest of your weekend. Bye-bye.